Guys, what's up? It's Philip at Trade Genius, and wanted to just let you guys know we're still running our 50% off special. If you go into our TradeGeniusAcademy.com website, you'll notice that we've got various packages. If you guys are interested in any of the courses, I don't talk about courses too much. I've always reminded you guys about our Signal service and chat room, but we also have these courses. So if you're following us, you want to know what our methodologies are, you can get any one of these packages or just get the training courses, and you'll kind of understand better what we do, and you can do your own trading and take your own discretionary trades. A lot of people have asked about this bear market. We did a bear market video course, and very simple strategy, but it helps you identify when to get short on things, or when to get, if you're long, when to get flat. This is a good course to understand how to defend yourself in a bear market. So I just thought I would remind you guys of that. And that being said, we have a month-end, quarter-end close on Bitcoin. So where does that leave us? Well, that's what we're going to dive into today's video. So let's get started.
Trade Genius.
All right, guys. So month end, okay, and what I look at on the monthly candles is kind of like what the volume is doing and what did we do compared to the previous month candles. So volume, as you can see, has declined. This is pretty standard operating procedure after we have a move up like we did in December. And declining volume into a direction. So if you're going down and volume's declining, that's actually a good thing. That means that that's in favor of a bottom, and then we reverse direction. In which case, if we get a nice green candle, so we're starting this month now, and this is the new candle we just closed here. The month close was at 63.85, and that's actually good in the sense that we made a lower low, but we didn't close lower than the previous low here. This low here was 59.20. All right, that was back in the month of February. So this is good. That's called a swing failure, and you close above, even though you made a new low, you close above the previous low. So that is what I'm observing on the monthly. Declining volume into this down move made a swing failure, and now we're getting a little bit of a bounce like we talked about in the last video that we did on Bitcoin. The other thing I'd like to note is that the MACD here is pretty much pegged. Last time we saw that was after the last correction, and we went into the 2014, 2015. That was that period of time where it got really boring, it got flat, so a lot of smaller swing trades was the way to go. But you could see MACD was pretty much pegged. And so when we get into this condition here, we call this embedded. When we get into that condition, what I'm looking for is a move up and out back into this shaded area. And so that's what I'm looking at here on the monthly. So as we spoke last week about where we were at, we were expecting a bit of a bounce, and we did actually get that, even though the daily signal fired. Now that being said, let's look at the weekly chart. So the weekly chart, you can kind of see we're in this formation here. If we took this trend line and moved it to here, you have a bit of a descending wedge actually on the weekly. And I like those. Those are pretty bullish. But again, this would require us breaking up through the 76.42 area. So as far as the oscillator goes, we're still heading down, and we're not seeing any divergences there. As far as RSI, though, we do have somewhat of a hidden divergence, and what that means is RSI kind of made a double bottom, even though price made a lower low. So that is bullish. And again, volume is declining in the downward direction. So again, descending wedge here, I do like that. So I think we have the ingredients here for a bounce. Obviously, we're starting to see the start of one here, but we got some technical levels that we'll look at as we drill down into more of a daily time frame. So now going into the daily, again, Now, we've talked about this oscillator is oversold. Once we get below this 40 level, we get we're looking for longs. And so that's kind of where we're at. And I think that what we need to do here is we'll switch over to this chart. This is a daily now. And what we've done is basically we've had that long signal, then we flipped short, and then you're probably going like, well, your long signal just fired 2 times and price did the opposite. That actually is a setup in and of itself. And it doesn't happen very often. In fact, I got like one other time going back to like 2013 where this pattern happens. And it's actually a bullish setup. Now, if we were in the opposite and we saw this where it was down, up, then we're looking for another down signal. In this case, though, we're bottoming, so it's an up, down. Now we're going to be looking for an up. And typically those happen, we call them flips on the daily. It happens about within a week of each other. So we're at 1, 2, 3, 4. So we'll be pretty close if price continues to do what it's doing here. In about 2 to 3 more days, we'll have a flip long again. So that would set up into something like a inverted head and shoulders, which, let's face it, guys, those inverted head and shoulders have been kind of fleeting. You get a little bit of a move off of them once you break the trend line, which currently would be like that. But the follow through has been pretty small. And that's just because we're in a bear market. So we're looking for counter trend bullish patterns, though, in an overall downtrending market. The other thing is we've got this price pattern here, price channel. And so we're looking at, now we're right up against it here. So this is about 9:30 p.m. Eastern Monday evening. And we've run right up into it. I've also got this support resistance line here that's been marked off at 66.25 roughly. And so we're right up against that. So it would not surprise me that we get a bit of a pullback. Also, we pretty much tagged this as fib extension, which was this move up pullback did not quite get to the zone we like to take a swing trade off of. And that's what we were kind of looking for after this first. Remember last week we went long. We were looking for longs here for the reasons discussed about this flip trade. And we actually got in the room, hit our target, and then it blew through that even more. So that was really bullish. So now you're looking for buy-in pullbacks. But understand where we're at. We're at the top of this channel, this price channel that's been respected for quite some time now. And so we're expecting to get a pullback. Although usually, typically, when we get a nice leg up, and I'm talking about a major leg up, so something back like we saw here with this move up, and also back over here with this move up. So we're looking for something like that to happen here up to the bottom of that pennant that we've been talking about. This is the old pennant in here. Okay. So right now, looking for another pullback because of the resistance that we're currently against. What's been very bullish is we got a healthy close outside of this bear fib zone. So I'm actually going to get rid of that one, delete that out. And we're going to actually, now that we've kind of more or less completed this up ABC move to this fib target here, we're now going to draw one here. So it would be great to get a long off of 6,200, but I think honestly, with the volume that I'm seeing here, we may not get more than somewhere between 6,450 and 6,500 on a pullback off of this move. So I would be hunting for longs in that area, but you got to give it some room. You could get a little bit of a spike down into the 6,250 area. And that's what I'm seeing here on the daily. So that's kind of what we're looking at this week as far as the next move on BTC. Resistance levels, if we are to break above this is going to be very bullish. It will take us into our weighted moving average 65. Notice we're above the weighted moving average 25. That's very good for the long side. But we are going to run up into here. And so that's going to be probably the next area where we're going to target and expect a healthy pullback. I would play something off of this level at that point if we got up there to about 6670 or 6690, 6700, let's call it. Now, as far as this move up and why you would even at all be bullish, because we're just trending down, 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 right? Well, we've got some custodianship issues and ETFs that have been approved. I'm going to get into that in the next video and why that's important. But I do believe that a lot of this move up has been off of that news. A big obstacle, or actually not an obstacle, but a big barrier to entry, and what some of the institutional funds have been waiting for is to get into Bitcoin, but have a safe place to handle the actual tokens or the actual Bitcoins. And they're not in the business of being tech companies, they're in the business of being funds and investing. So they want to make the investments, but they also want to make sure that their custodianship of what they're investing in is safe. They're not going to be losing keys and things of that nature. So I do think that it is a catalyst for a bit of a bull move here. Not anywhere out of the woods yet. Ultimately, I think we do get up here and we tag this level here of the underside of this old pennant at 7,400, but we got a bit of work to do here as far as the bulls go. So there's money to be made going up and fading some of these levels, and we're going to be talking about that in the room. Again, if you guys are interested in getting into the room and stuff like that, or learning how we trade, check out TradingGeniusAcademy.com. Otherwise, guys, we'll talk about those ETF and custodian issues on the next video. Thanks for watching. Please hit like and subscribe, and we'll see you on the next video.
Trade Genius.